Hi guys, it's Greg here from BCR with a market update. Okay, so today's an important day in markets in that we've got two big risk events happening in the US. So the first risk event that we've got is US monthly CPI, which comes out 1 hour before the US market opens. And then a few hours later, we actually get the Fed FOMC meeting. So look, if we start off with US CPI, if we have a look at the last 7 months of US CPI, the market's actually traded up on 5 occasions in the last 7 months, and on the 2 months that it actually traded off in CPI, it actually only marginally traded off, and those losses were actually recouped in the following session, and the market then traded higher. So the key takeaway from that is that US CPI has actually been very market friendly for a very long time. If we have a look at how the market actually closed last night in the US, we saw S&P and NASDAQ spike up to make new record highs. So the market is actually trading into CPI on balance, risk bid, and the market really isn't scared of the CPI print coming tonight. Okay, so if we actually look at the CPI number tonight, market's expecting for the headline 3.4% year on year, and for the core number they're looking at 3.5% year on year. Okay, so what would spook the market with respect to CPI is if the number actually came in obviously well above expectations. So when I say well above expectations, you're looking at a print that is pushing back up towards 4%. So look, if that did happen, that would actually change the narrative in the market from market expecting rate cuts to the market thinking that the Fed actually has to raise rates again. So if that happened, obviously we'd see US bond yields a lot higher. We'd obviously see the US dollar being bought aggressively. Precious metals would sell off, and obviously we'd see the equity markets fade off these record highs. So that would initiate a big risk-off move. Having said all of that, I'd say that is probably the low probability outcome for CPI tonight. Probably look, the high probability is that it will come out on expectations. And the market should be okay with that and continue with the current risk bid. Look, if the market actually, if the print actually came in on a softer number, so it actually came in below expectations, market would absolutely love that. So we would see this current risk rally explode the next leg higher. We'd see bond yields a lot lower, US dollar a lot lower, and obviously the commodities and precious metals would love that and trade higher. Okay, so moving along to the Fed. Obviously no one expects any rate change today, but why this actually is an interesting meeting for the Fed is that we actually see the dot plots. And so this is where the Fed gives their expectations of where they see rates in the future. This comes out quarterly. The last time this came out, the Fed actually had penciled in 3 rate cuts for the end of the year. So look, the market expectations is for the dot plots actually to start pricing out some of those rate cuts, and so we'll probably see the Fed taper that down to only 2 rate cuts. But there is also a chance that potentially they take that down to only 1 rate cut. Now, if that actually did happen, the market would then look at this Fed meeting as a hawkish hold. And we probably would see bond yields on the back of that higher. It'd give US dollar a boost, and potentially we could see equities and risk fade off the current record highs. Now all up though, out of the 2 risk events, CPI is obviously the most important. The simple reason is that CPI influences how the Fed actually makes their decisions. So I would say that how the market actually trades post CPI, I would assume that would continue throughout the actual Fed meeting, and so it would take something left field for the Fed meeting to actually change the direction of the market post CPI. Anyway, look, good luck with the trades tonight, and we'll check back in after the dust settles.